welcome to another live stream. Today we're going to discuss the real factor, the real reason that we are seeing the price of gold sitting near all-time highs. The real reason that we are seeing the purchasing power of the dollar diminishing against the precious metals here. Today, kind of a slow day in markets, kind of a mixed day. The FOMC meeting at the Federal Reserve has kicked off. I don't think there's a chance we're going to get any rate cuts just yet. But the real factor here driving the precious metals, it's not the portent of some future Fed rate hike. What it is the escalating global conflicts around the world and the trend towards global de-dollarization. That is what is driving central banks around the world to hoard gold and drive the price to these all-time record highs. And the thing about this is, this is a trend that is only going to accelerate from here, and we're watching it accelerate and expand before our very eyes. Don't forget, you want to get your hands on some hard assets before they really start to take off. Make sure you check out today's video sponsor, SD Bullion. Right now, they've got junk silver on sale for $1.49 over spot. Just an incredible deal, and I think that as this trend continues, the gold price is just getting started, and eventually silver's going to catch up. I mean, silver's already up almost 10% in the past month. That is a trend that is not going to change anytime soon. I just picked up some more of these half dollars from SD Bullion. They sent me some nice rolls of these Kennedy 1964 halves. They're in great shape, not very worn at all. So really happy to get those. And I think there's going to come a time when you really can't get the junk silver for nearly these prices. But let's get into the escalating global conflict around the world, because it's really starting to heat up at a rapid pace. We have got Vladimir Putin now warning the West that we are just one step away from a global World War III. Putin saying this in his victory speech following the Russian elections, which just concluded, an overwhelming victory, I guess you could say, for Putin. I mean, I don't know how the elections really work over there. I'm sure that there is some chicanery involved, but hey, that might be the case here as well. Certainly a lot of people in the United States believe that. So Putin is saying now that NATO personnel are already operating within Ukraine. It's saying that the Russians have picked up French and English communications on the battlefield. This likely has been going on for some time in the form of mercenaries that NATO militaries have been sending over there, but certainly this does seem to be something where the NATO role in Ukraine, as they run low on manpower, is probably going to continue escalating. And these are the red lines that you kind of cross slowly, one at a time, right? First, it was, we're not going to send tanks. Now we're sending tanks. We're never going to send aircraft. Now, we're sending F-16s. The NATO involvement in this conflict continues to escalate. And this is very interesting. This is one that is not really a confirmed report, but some stuff that was being reported in the media over the weekend on some smaller outlets online. And that is that China has now signaled a willingness to intervene militarily in support of Russia against U.S. or NATO action. So again, this is an unconfirmed report, but the story goes that a Chinese Defense Ministry official reportedly declared Beijing's readiness to intervene militarily should the United States or NATO launch an attack on Russia. Again, this was originally from a Telegram channel. It's being reported by News Bites and Times Now, so not exactly confirmed. However, it certainly would not be shocking. We know that the global South, the BRICS nations, Russia, China, and their new expanded cohort, which includes Iran and Saudi Arabia, the lines are kind of being drawn here. We have the Western hegemon, the old powers, lining up against whatever you want to call them, the anti-Western hegemon, the global South. And if we go to war with China, just imagine what kind of an effect that will have on de-dollarization. The Chinese hold a tremendous amount of U.S. Treasuries. They hold huge dollar reserves. They've been stacking up gold. And this is just one more confirmation that around the world, the lines are being drawn. There's no sign of de-escalation here anytime soon. And also think about what's going on in the U.S. We just passed this bill to support banning TikTok. Now, I have someone in the chat here. The TikTok ban is going to be highly antagonistic. I'm trying to pull my chat up here so I can see. Someone says, start stacking or stop stacking. I'm confused. I was predicting World War III years ago. Well, listen, if you've got a World War III on the mind, if you think that is ahead, even if we don't get some kind of a major hot conflict, one aspect of this that is going to continue to expand is the de-dollarization aspect of things. The BRICS nations recently announced that a focus of theirs for 2024 is going to be enhancing cross-border payment systems which do not utilize the US dollar. And, with good reason. I mean, the dollar, the Western G7 currencies, they continue to be weaponized. And, you might think that's a good thing. You might be in the camp that, we're already in this war, and war by any means is fine, but you've got to understand there will be repercussions for that. And there is a reason that central banks around the world, especially the central banks of the BRICS nations and those in the global south, are loading up on gold at a record pace. And, they have begun to reduce dollar holdings in some ways. We're actually going to talk about that later in the video. In the holding of U.S. Treasuries abroad is actually on the rise, but that's because there's just a huge number of them being created. But think about the dollar holdings that are already out there. Imagine if they were to be liquidated. What would happen to the purchasing power of the dollar, to the rate of inflation in the U.S., to the ability of the federal government to continue to run these enormous deficits? Someone in the chat says, you're talking like gold is rising and going up today. Everything is down. Well, okay, look, I mean, gold is down today. Let's take a look. I've got the numbers pulled up right here. Gold is down 0.41%. Silver is down 0.53%. Silver's still over 25 bucks. Gold, I mean, 21.55. To put this into context, there was that overnight run up that we had at the end of 2023 when gold hit, I think, like 2150, 2160, and everybody lost their minds, and then it corrected from there. Well, now we're there, solidly, right? Gold is clearly holding its own above 2000. That, I think, is very strong support at this point. We have very mixed markets today. Everybody is waiting to see what happens with the Federal Reserve. That's the driving narrative here for retail investors in the United States. However, central banks around the world, they're not as fixated on what the Federal Reserve is going to do as the American public is, and as retail investors in the United States are. I mean, one reason that premiums on gold and silver are still so low, and I mean, all you have to do is go look at SD Bullion, you can see they're selling junk silver for $1.49 over spot. Gold, what do they have here? 5% over spot. I mean, that's a relatively low premium. You can get these 1 ounce Scottsdale Mint Cowboy rounds, any quantity, $50 over spot. If retail investors in the United States were pouring into the precious metals, those premiums would be much, much higher. However, who is buying up all the gold and driving up the spot price is the really smart money, the foreign central banks, the central banks around the world, because they know what is coming, right? And eventually the Fed is going to cut rates. I mean, everybody's obsessing over every little word coming out of the mouths of these central bankers. I'm sure tomorrow, at the press conference, all the reporters will get around Jerome Powell and say, oh, thank you, sir. Thank you so much for answering my questions, Mr. Powell. All hail mighty Powell here, because that's the attitude at these pressers. But ultimately, I think that it's going to become clear that the Fed is, they're in a corner. I mean, they're going to have to cut rates, or the whole thing is going to collapse. Let me get some better light in here. There we go. So look, the Federal Reserve, they're going to have to cut. They're going to have to stimulate. We have an illiquid banking system here. We have a major banking crisis. We have a major commercial real estate crisis. We have the bank term funding program just came to an end. Those loans are all going to start coming due. The Fed's going to have to print one way or the other, but that isn't ultimately going to be the big factor here. I mean, it's going to, eventually destroy the dollar when we have a huge, massive sovereign debt crisis and the Fed has to run the printing presses like they've never done it before. But right now, That hasn't happened. I mean, perhaps some of that has been priced into the market, but imagine when they actually do start cutting. I mean, gold is already knocking on record highs. Silver has started to move. I mean, it's above 25 bucks. It was, much lower than that a month ago, but I mean, it's barely started to move. When the Fed starts printing and you have global de-dollarization, well, that's going to be off to the races for the metal. And you got to understand, the global de-dollarization is one of those factors that will force the Federal Reserve to run the printing presses in the first place. Because, we've been selling U.S. Treasuries to these foreign holders for years, running up enormous debts, exporting our inflation. The amount of U.S. debt held abroad is over $8 trillion now. When all of that money starts flowing back, when those buyers stop buying our debt and they begin selling it, well, who's going to buy all the debt, right? Is it going to be you? Is it going to be me? It'll probably be the Federal Reserve. But let's keep on with the stories here. I had the chart of crude oil pulled up. One thing that's not in the red today is crude oil. You can see it continues to put on gains, now up to almost 84 bucks, 83.56. The situation in the Middle East continues to devolve. We're heading towards conflict on many fronts here: in Ukraine, in the South China Sea, on the Korean Peninsula, in the Red Sea. Today's most recent report: Israeli missile strike targets Syrian military installations. The brewing war on the Israeli-Lebanon border is likely to kick off in the very near future. They're continuing to launch airstrikes into their neighboring countries. They've begun their invasion of Rafah. Remember, the southern Gaza city of Rafah, the Israelis are now mounting an invasion of that city. That was one of the factors that was cited when just a week or two ago, I reported in a live stream here, shared with all of you, how Iran has now reportedly given Hezbollah the green light to launch a major attack on Israel. One of the contingent factors there was that Israel moves on Rafah. The idea being Hassan Nasrallah, the leader of Hezbollah in Lebanon, was saying that once Rafah is taken care of, Lebanon is next. And he may very well be correct. They said it's going to happen during the month of Ramadan. Well, that's where we are right now. Ramadan, I believe, began on March 10th or March 11th, and it persists for a month. So, there's a lot of crises around the world here, and as they escalate on multiple levels, this is going to be driving the price of precious metals much higher. One, our opponents around the world are going to be dumping the dollar, and not out of some sense of malice, but out of a sense of self-preservation, right? If they feel as though they're going to be on the receiving end of U.S. sanctions, U.S. currency controls, I mean, we've shown our true colors here that if you're not on the right side of the equation here politically, you could be cut off from the entire Western financial system overnight. And so, does it make sense to hold all of your reserves in dollars when that's the case? No. I mean, you might be getting paid in dollars. Maybe you're one of these OPEC nations selling oil, and you're, abiding by the petrodollar agreement, basically selling it all for dollars. What are you going to do with those dollars? I mean, you're going to go buy hard assets, gold, divest yourself from a currency which exposes you to a huge amount of risk in this environment. Look at this story. Okay, we've got Europe now reporting that they will be tapping into frozen Russian assets to supply the Ukraine military with arms. So this is from Germany. You got Schultz there telling us this recently. This report is from March 15th. Originally, it was kind of being debated whether or not these frozen Russian assets would be sold off. Their fate wasn't exactly sealed, but now German Chancellor Olaf Scholz said that European countries would use the windfall profits generated by nearly $300 billion in frozen Russian assets to support weapon purchases for Ukraine. The first time Berlin has voiced support for the idea. So as the situation in Ukraine becomes more dire, now we are kind of seeing what ultimately will be the fate of these $300 billion worth of frozen Russian assets. And when nations around the world see this, this is yet another sign of the weaponization of the Western financial system. And it means that they're going to want to divest themselves of that. Do me a favor. We're at 257 people on the live stream. Oh, 268 just jumped up. A huge thank you to all of you for tuning in. Do me a favor, smash that like button. We got about 48 likes right now. If you all do it, we'll get it over 100, and I'll quit bugging you about that. And subscribe to the channel too, and share the video after we're done here. Now, keep in mind what was occurring following the sanctions implemented against Russia. This is a report from Reuters from last year, from July 9th. Countries repatriating their gold in the wake of sanctions against Russia study finds. Now, the interesting part about this is that, gold is one of those assets with a lack of counterparty risk. If you've got dollars and upset Washington one way or another, and they decide to cut you off from SWIFT, cut you off from the Western financial system, those dollars don't do you much good. But I'm sure much to the frustration of the powers that be in the West, when our foreign adversaries are holding gold, well, it's very difficult to weaponize that against them because, what can you really do against somebody's gold? Sure, you can say, gold sourced in this country is not welcome, it's banned. You can try to control that, but that is much more difficult than managing digital dollars, which can be frozen with the flick of a switch with a few keystrokes. Physical gold, it's the same reason that we stack it as stackers, no counterparty risk. You're not going to wake up tomorrow and find that your gold has been, bailed in from your bank. You don't have to go count on anybody else to give this to you. You can put your hands on this stuff. It's in your hand. Like, this is my gold, right? Unless you physically take it from me, I don't have to worry about it. And this is why we're seeing the price of gold get bid up so high. It is no shock that the price of gold continues to move higher as conflict continues to escalate. And this conflict, look, I hear people in the chat sometimes in the comments telling me I'm a fear monger. I'm too doom and gloom. And look, there's a time when there's, to be a little more risky, to go out there and not worry too much about risk. But you'd have to be completely blind to not acknowledge that the geopolitical situation around the world continues to devolve in a very significant way. Let me know how you see this playing out. If you think that we are going to continue heading down this road towards greater conflict until it reaches, perhaps open warfare or some critical point, put a 2 in the chat. If you think that everything's going to cool down and everything's going to go back to, quote unquote, normal state of globalization, put a 3. But if you ask me, the globalization is over. From here on out, until this situation gets resolved, we're going to see this conflict get worse. That's the trend. Nothing goes up in a straight line, but the geopolitical tensions seem to have been doing that considerably recently. Now, what do we have here? This is an interesting story this is actually from February, and I came across this because I was looking up some content for this video. I wanted to see what foreign nations were doing with U.S. Treasuries. I like to keep an eye on that because I think it's very important. And actually, foreign holdings of U.S. Treasuries, according to the most recent data, have surged to an all-time high. They now exceed $8.06 trillion. And in December, even China was buying. Now, why is that? Were they enticed by higher interest rates on the U.S. Treasuries? That's possible. Perhaps, they wanted to devalue their currency, although, they've had a lot of inflation there. But one of the reasons that China buys up all these dollar assets is to keep their exports cheap, right? To keep the dollar stronger than their currency, to help encourage exports of their goods. And what do you think is going to happen if they decide to militarily intervene on behalf of Russia? Again, those are unconfirmed reports, but I don't think anybody would be shocked to hear that out of the Chinese Defense Ministry as the situation in Ukraine heats up. Are they going to continue to be concerned about their ability to export to the United States? Not likely. They'll, find a domestic market, I suppose. Maybe they'll export to the BRICS nations, which do have a huge portion of the world's population. There's plenty of potential consumers for Chinese goods throughout the global south. if we go to war with them, one, you can count on your Walmart and your stores and your Amazon stores to be, completely out of stock of all the stuff that gets manufactured there. But also, you can expect them to proceed with dumping their treasuries, and that's going to, have a dramatic effect on the interest rates on U.S. treasuries, which, by the way, have been moving up. I mean, look at the chart for a 10-year treasury over the past 3 months. You see the number going back up. I mean, if we zoom that out, you can see that it's off the highs from last year when rates got up to almost 5%. That's a real problem, but they're on the way back up. And, part of the reason that you're seeing the number of U.S. treasuries held abroad soaring to a record high in December is that the number of U.S. treasuries being issued is absolutely exploding in the form of massive deficits, which have to be financed by borrowing, right? I mean, that is, I think, kind of a no-brainer. And when you look at how many U.S. treasuries a place like China has, so according to the December numbers there, you can see they have 816 billion. That's up from a low in October of 769 billion, but it's still well below the level that they were at just a year ago, right? They were at 867. So, I mean, the trend is down. And again, nothing goes down in a straight line, nothing goes up in a straight line. They might have been enticed for any number of reasons to come into the market and buy in December. Maybe they'll buy more if interest rates continue to spike up. But ultimately, this is a huge trap for the US dollar, this exporting of inflation around the world, because eventually that inflation is going to flow back home, especially if we get involved in open warfare with some of the biggest holders of foreign treasuries. And, that's going to be a huge problem. And speaking of China, they may be buying U.S. treasuries once again, at least in December they were, according to the most recent data. But you know what else they've been buying? They've been buying a lot of gold. In 2023, Chinese gold purchases soared 30%. Now, they say this is on economic anxiety here in this headline. Also, it is geopolitical tensions. All these fiat currencies are in a race to the bottom. So sometimes, I'll criticize the US dollar and say, look, I mean, the dollar could lose its world reserve currency status. There's a huge risk of that as this conflict heats up and as central banks around the world move into hard assets like gold. But I mean, the Chinese yuan is no better. If the BRICS currency, I mean, if the BRICS nations get together and they issue a currency, if it's a fiat currency, it's not, immediately convertible into gold. It'd be a huge, same threat there. But you don't need a fiat currency alternative to the U.S. dollar, right? I mean, there already is a very viable alternative to the U.S. dollar for holding reserves, for conducting international trade, and that is gold. And I believe that that is why these banks are loading up on gold for that very reason. And, it's why I'm continuing to do that as well. I'm still buying more silver because I think that it is incredibly cheap relative to gold at the moment. And eventually, I mean, typically throughout history, when gold goes on a bull run, silver is not far behind, and we're just not there yet. The gold to silver ratio has come down a little bit, but it remains very elevated. And so, as these conflicts around the world escalate, eventually I think the American public is going to get the memo. They're going to want to get into hard assets too. Of course, that probably won't occur until the price of the metals is significantly higher than it is right now. So I do view currently there, as a huge opportunity for us stackers to continue to accumulate hard assets. And look, I mean, sometimes people get kind of impatient with this. They say, "Oh, I'm locked and loaded with silver. I'm ready for the price to take off." But you got to be careful what you wish for, right? Because soaring price for gold and silver, which I do forecast is coming. I mean, look, anybody, doesn't know what they don't know. So I can't guarantee that. But I think at the moment, when you look around the world and you see the state of the geopolitical situation, you see the state of the U.S. economy, the odds favor the holder of precious metals. And yeah, I mean, you got to get these things. That's why central banks are loading up on them around the world. As things heat up around the world, fiat currencies are going to show their weakness. And look, war is one of the most inflationary endeavors a government can engage in because I mean, it's just destruction of wealth, right? You print all this currency, you use it to buy up all the material in your country, and then you blow it up. Obviously, no one's out there benefiting from the enhanced supply of cruise missiles, except for maybe a few companies that produce them and get to, collect that printed money before it's completely devalued. But you got to get your hands on some hard assets. I mean, to face what we're heading into. That's my thoughts. It's not financial advice. I'm just kind of telling you what I'm doing, but I am continuing to stack hard assets. Junk silver, in my opinion, this is just my take on it, but this remains probably the most undervalued asset out there. I think this is one that is really going to take off, especially when it comes to physical assets. They're divisible. They're not making them anymore. They're extremely cheap right now, and that's not going to last. So I'm going to keep stacking up these. Maybe I'll get some more if we get some kind of a pullback tomorrow. I mean, who knows? We don't know what the Fed is going to say tomorrow. Market's going to be hanging on their every word. Might get some kind of a pullback in the markets if the Fed acts overly hawkish. If investors don't like what Jerome Powell says, if the AI trading algorithms don't like what Jerome Powell says, but that would just be another opportunity to get into these things before they take off, if you ask me. I'm sure that tomorrow we will have much more to talk about following the FOMC conclusion. Someone in the chat there again says 66 pounds of silver for every cruise missile. Maybe. I'm a little skeptical about that claim. That's one that I keep hearing people make, and I'll mention that I'm skeptical about that in the videos, and people will post comments like, "Well, skeptical or not, they're there." Okay, well, I challenge any of you who say that there's a box of monster box of silver eagles in every missile or whatever, whatever it is, 500 ounces or 66 pounds. I hear all these claims, but this is one that I also see experts make this. People who you would think would be a little more circumspect. But if you can find a source for that, anybody, please post it in the comments, because this is one thing that I hear all the time. Yeah, Luke says more like 25 to 50 ounces in a missile. That sounds more accurate to me. I know that there's probably some silver solder used, maybe a silver battery or two, but I'm very skeptical of that claim of 500 ounces or 66 pounds of silver in every cruise missile. I mean, hey, if it's true, then yeah, a lot of silver is getting consumed there. But this is one that I just see endlessly made with very little reference. So, don't just tell me that it exists. Go find a diagram or an expert on cruise missiles. I mean, I don't know that much about them. I've never, worked for Raytheon or anything, but if you can find me somebody who's a real expert on that, post a source in a comment, because trust me, I've looked and I have found it very difficult to confirm this information about all this silver being contained in these cruise missiles. But they're sure launching a lot of cruise missiles, and ultimately, look, I mean, cruise missiles cost something like $2 to $4 million a pop, depending on the model. So even if there's no silver in them, it doesn't matter. It's very bullish for the dollar price of silver, because all that money is getting borrowed. It's all getting borrowed from the future and spent into the now. Ultimately, that's a debt that's going to be monetized by the Federal Reserve. Yeah, I see some folks in the chat. I'm not going to mention any names, but they're mentioning some experts, who talk about this missile thing. And again, yeah, I hear people that I actually like and that I respect their opinion making this claim. But this is one that I've never been able to independently verify, and I've asked in the past for sources that indicate this, and nobody has ever been able to provide it. So let me know what you think. If you know how many ounces of silver are in a cruise missile, or you have any definitive proof or source of that number, put it in the comments. Anyway, thanks for watching, everybody. Stay safe out there and happy stacking. The world's getting to be a crazy place. Make sure you smash that like button. Consider getting into some hard assets. Not financial advice, just what I'm doing, but something you might want to take a look at, given the nature of the events that are playing out before our very eyes. And I'll catch you next time. Smart Silver Stacker, out.